Thank you, Senator Bushby. Senator Williams.
Thank you, Mr Deputy President. I'd just like to add some comments on top of what my colleague Senator Bushby has contributed in his presentation then. I have made some additional comments and recommendations in this inquiry. Mr Deputy President, Senator Bushby emphasised that we are not a court and how true that is. Could I say that very concerning some of the evidence that came forward. People were distressed, enormous financial pressure, and hopefully this inquiry and recommendations will bring this to the attention of both sides in this whole financial game, whether it be the banks or the lenders. I do have concerns about Section 428 of the Corporations Act, Mr Deputy President, when we have a property owned by Mr Jim Neal in Sydney, was valued at $4 million. It was sold for, I believe, $635,000, and after the sale it was valued at $3.58 million. Section 428 says that those receivers in place of controlling those assets must sell at the best possible market price. I asked Senate estimates, asked ASIC and Senate estimates, have they ever charged anyone under Section 428? They're coming back to me on that. They took it on notice. I think Section 428 is a toothless tiger, and it needs addressing so that when assets are cashed up, the best possible price is achieved for those people who are being sold up. Mr Deputy President, huge concerns about Bank West when the Commonwealth Bank took over Bank West. Lots of arguments saying that Bank West had a clawback system. It was in their interest to impair loans so that HBOS, Halifax Bank of Scotland, that fell over in the UK, would have to reimburse basically the Commonwealth Bank for the price they paid for Bank West, whereas Commonwealth Bank and Bank West said this is not the case. I suggest that ASIC look through the whole transactions and see that the corporations law has been abided to by all the way through that transaction. A lot of pressure to lend, no doubt a lot of bank managers, loan officers under a lot of pressure to meet targets. This is concerning, and evidence from the Financial Sector Union saying how when a loans officer has a target set for that person, him or her, to lend that much money a month, even if they go on holidays, even if they're sick, they still must meet those targets. And that can be very difficult in a time of lack of business confidence, as sadly we're seeing in many places in Australia now. We know that we have a lot of debt out there, and there must be a limit to it, and so a lot of those workers are under enormous pressure. Mr Deputy President, one concern I did have was that the penalty interest rates when someone defaults on their loan. One customer of Bank West was paying around 8%. When they defaulted, their interest rate went to 18%. Now, that's a huge increase. To me, it appears that when you're down, we put the boot in. But the point I make, Mr Deputy President, is if someone owes the bank $1 million and their assets $1.2 million, they put them on penalty rates 18, 20, 25%, nothing is regulated in that respect, then if they sell asset up for $1 million, if it takes 12 months to clear the decks, then their debt may have gone up another $200,000 or $300,000, and that is tax deductible to the bank. So they're in a situation they can basically dictate their tax deduction. What other business can do that in Australia? This is something I think needs addressing, so that if you're paying 8% and you default, there should be a maximum of no more than an increase of 50% on that 8%, in other words 12%, is my opinion to that very issue where we see interest rates go so high when people, most of all in their business life, do not need to have the boot sunk into them. Low-doc loans, Mr Deputy President, very concerning of those. I tabled a statutory declaration to the committee this week where the loan application form had been falsified by the bank manager. Figures put in there were not true. Assets and investments were simply not true. And it's clear that through the work of Ms Denise Braley, this is to get the loans over the line. To meet those targets, the loans officers have to meet. And so they've been fudging the books. The applications, I raised this with ASIC and Senate estimates, and they said the latter's fraud. And I asked ASIC to work with Denise Braley, to go whose organisation is a Banking and Finance Consumer Support Association, to go through and look at those and, if necessary, make a recommendation to the Department of Public Prosecution. We had one case of GST where the receiver had sold the asset for $9 million. Of course, the receiver was paid $9.9 million. It attracted GST. that money went under the bank. But the bank didn't want to hand that $900,000 back to go to the Australian Taxation Office. That, is, to me, is a very serious issue, and information I've received from phone calls and others are saying that this is not uncommon. And the Australian Taxation Office should look at this very issue. I'll just raise this point in closing. Mr Deputy President, under the GST Act, liquidators, receivers, managers and administrators are all collectively referred to as representatives of incapacitated entities. Such representatives are personally liable for any GST payable on taxable supplies that are made by a company post-appointment. Post-appointment, emphasise. The ATO ranks as an unsecured credit in respect of pre-appointment liabilities. This means that the ATO is at risk that it will not receive pre-appointment GST liabilities in full. However, if a representative is personally liable for the GST liability that arises post-appointment, the ATO is likely to recover its GST liability on post-appointment supplies in full. And this needs to be clearly spelled out to the insolvency practitioners industry of that situation. Mr Deputy President, I'll close in saying that I fully support a full and thorough inquiry into the finance industry in Australia. It's been a long time since we've had the Wallace inquiry. There are many issues I could talk on, whether it be support from the government to ADIs but to non-ADIs, which obviously reduced competition. We know the costs of the bank's funds have risen. There's no question about that. Hence, their movements are not in parallel all the time with the Reserve Bank cash rate movements. But in closing, I'd just like to thank Senator Bushby for his chairing of the committee and his interest and input, to the staff, as he has mentioned, and to the other senators who are involved. And could I say to those who sadly gave us evidence and submissions, many of them have had an extremely tough time. I hope they get over those tough times, that their future is brighter for them financially and they can cope with the mess they've been in, because there are some terrible situations. Paul French at Cobar with his hotel sold up for about the price of the poker machines. When I phoned the bloke, he's off to the Royal Prince Alfred Hospital, having his 3-monthly check that his leukaemia is still in remission. So tough times for many, and I do thank those people involved, the senators and the staff, for doing a wonderful job.